Welcome, everybody, to another episode of the Gold Silver Bitcoin Show, brought to you by the GoldSilverBitcoin.com store. We are more than honored to be sitting down today with Kyle Floyd, the CEO of Vox Royalty Group. Thank you so much, Kyle, for joining us today.
Justin, my pleasure. Thanks for having me on.
I guess let's start real basic on what you do and how royalties play a role and why they're important for gold mining investors in particular to understand.
Yeah, sure. So I founded this company almost 10 years ago now, and it was really built around providing a platform for a more generalist investor that wanted commodity exposure to be able to get that exposure in a way that was relatively straightforward, relatively safe, but still provided the significant upside that you're looking for in exposure to commodities, especially with the backdrop that we've spoken about offline about inflation being so significant these days. So the business was founded to advantage investors. That's at the end of the day what we were looking to do. And we believe that we could accomplish that through a somewhat nuanced royalty company. Royalty companies have been around for a long time. There's the majors like Franco-Nevada, Wheaton Precious Metals, Royal Gold, all, in the case of Franco, a $30 billion market cap company. So very, very big companies, significant companies that have been around for a while. They've been doing it successfully. They've outperformed pretty much any commodity-based benchmark you would compare a royalty company to. That's the physical, that's the ETFs, that's the underlying mining companies, that's even the S&P 500. And in the case of Franco-Nevada, I believe that's the NASDAQ as well. So very, very successful platforms for investors. We looked at the royalty model. There's a reason for that. And the reason for that is what a royalty does is essentially gives you a top line interest, a percent of revenue. So royalties are usually called 1% NSRs, or net smelter returns royalties. That's the nomenclature of the industry. And that entitles you to 1% of the top line revenue of an underlying mining operation. The really profound component to royalties is really twofold. One, they're the top line. So they're not impacted by all the cost structure of a mining company, both their fixed and their variable costs, which are under attack by inflation. And they're undiluted and typically run in perpetuity. So the reality is you have this undiluted interest that is able to be better diversified and not exposed to the rising costs that we see in today's climate. So the royalty companies that have been around for a while have really outperformed the market. They've offered investors a way to play commodity exposure that, in our opinion, and we believe, is the best way to play commodities. And so that is what our business was built around. We have some nuances that we, from a Vox perspective, feel very strongly that creates alpha within the royalty industry, but that's the model and that's what we execute.
What were the underlying market conditions that led you to start this project 10 years ago? 10 years ago was 2012. I might note that gold was reaching an all-time high at that time of 1920 before essentially, I guess, what has been a bear market, as we've seen a world history breaking bull market run in the stock markets. Gold kind of was put off to the sidelines. Can you speak about the economic backdrop to starting this company?
It's interesting in that back in 2011, 2012, when this business started to come into its formation and its existence, inflation was not top of mind for investors, not even far from it. And what the problem was that I was trying to solve through the creation of what is now Vox is giving investors a way to play an inflation trade for the time that we're in. But really, at the end of the day, play commodities. Commodities do well in inflationary times. The problem, though, Justin, was the fact that it's very difficult for an average investor. They can be very smart, very sophisticated, but it's very difficult to understand an underlying mining company that typically has single asset risk. There's a lot of metallurgy, there's mining engineering, there's geology. There are a host of issues and a host of really very, very esoteric skill sets that are needed to understand a mining company well. And when investors go looking for commodity exposure, they naturally look to the mining companies and they look to the indexes. So mining companies, very hard to understand, a lot of risk. Well, if you go to an index or you go to the physical, there's no leveraged exposure. So you play the mining company because you want leveraged exposure to precious metals. And then you play the indexes because you just want the direct exposure, but it's not leveraged. Both of those leave what I think are kind of big issues for investors to deal with. One, they're not getting leverage to the dollar for dollar gains in metal prices that they're hoping or expecting to occur. And the mining companies, they're not truly understanding the risks. They're in a very capital intensive business. And ultimately, if you find yourself in that inflationary environment and the metal prices are going up nicely, but not necessarily keeping up with inflation, you're actually seeing margins getting eaten away in the underlying mining company businesses. So the royalty model solves that problem for investors. And on our business, what we did a little differently is we put mining engineers and geologists on the front lines of our business origination team, our business development team, because we're understanding the technical risks, the technical elements of these projects, the metallurgy, the geology, the engineering, for generally a generalist investor, so they don't have to have that expertise. And that is kind of the problem, if you will, that we set out to solve for investors. Get the exposure, get less risk in a more understandable format that's not exposing you to a series of risks that you ultimately don't want to have in your investment portfolio.
I just want to make it clear that I invited you on this show. This is not sponsored. I want people to understand how to, I guess, protect their money as things become increasingly volatile. And this is something that I think has crept into the mainstream. I think that perhaps when you were looking at this in 2011, 2012, you saw the preconditions of perhaps, if not chaotic, then deteriorating economic situation and climate. And I think that when the lockdown measures were implemented, that it became clear. And now it's, I mean, painfully clear. We've now seen, for instance, an entire country like isolated, sanctioned, that is Russia. So it's important that what I guess we weren't taught in school, whether that be public education or private schools or higher education, we catch up on now. And so I was curious about the royalty model myself. And I know that there's more to kind of investing in these companies, these mining companies, than just looking at maybe what you think they will pull out of the ground or what they're saying they will pull out of the ground. And that there's like ways to kind of hedge as well and earn money investing. Any comments on any of that?
Yeah, I think in today's climate, the macroeconomic backdrop, both from a geopolitical standpoint, from an inflationary standpoint, from just the myriad of risks that investors are facing, diversification is so critical. And it's core to our business model. We're diversified in that we hold 55 royalties and streams on mining assets. And so we believe in that diversification model. You should do that as a business. You should also do that as an investor with the individual stocks that you're holdings or the individual exposures. But it's become a very interesting investor climate. And your point about where we were in 2012 to where we are now, look, inflation was not there. I don't recall the geopolitical regimes or the regime that we were in then in terms of uncertainty being quite like it is now, where you have Russia invading Ukraine. Clearly, that's added a very different risk that investors are dealing with. And you're continuing to see more risks. The Fed obviously going into a tightening cycle. You're seeing more risk. You're not really seeing risk getting taken off the table. And so today feels different than it did back then. But I think, again, we were solving a problem back then that is really, really needed now. So the solution that we believe that we present to investors is as needed as it's ever been. And so we continue to execute a very disciplined business model to offer that solution to investors and to continue to grow the business.
We're looking at some of the headlines today, and we see inflation. We can pick an anecdote. Phoenix, which has seen an 11% increase over the past year. The Labor Department has shown inflation jumping 7.9% over the 12-month period ending in February, which is the sharpest spike since 1982. The Wall Street Journal says that the 11% inflation in Phoenix could lead to sort of different sentiments amongst voters for who they vote for. And then in California, Gavin Newsom has a plan for free gas cards that experts suggest could drive inflation even higher. And Elon Musk SpaceX has hiked Starlink internet costs over rising inflation. New customers now to pay $710 upfront. How has it been to watch this all kind of unfold over the last, I guess, 2 years, but also over the last month?
got to be honest with you, Justin, we really expected it. I'm not a market prognosticator. We really focus and keep our heads down on executing our core business and doing it very well. That being said, it was pretty clear that inflation was going to take off. If you were just watching the data, that doesn't mean that we were smarter than anybody. We were just paying attention to the data. And that really didn't influence how we were going about our business, because we look at a scenario where gold is flat or declining in price. But as a consumer, you couldn't help but miss the telltale signs. And what we did believe is that we were going to be entering a very bullish cycle for commodities. Gold has done well and commodities have done extremely well in inflationary environments. And inflationary environments are typically, they are the leading indicator also of a Fed tightening cycle. And in Fed tightening cycles, gold is outperformed usually. So we kind of believed that we were going to head into this environment. It's very difficult on consumers. It is, and you're seeing it where the pay raises are not increasing at the rate that everybody's costs are increasing. And so that's a really deleterious effect of inflation. And I think everyone's feeling it and is probably frustrated by it. So from an investor perspective, it's becoming a very difficult climate to invest in. And where are you going to find confidence in a market like this? And so we have, as a royalty company, just tremendous wind at our back. It's hard to say because as a consumer, you feel it, you feel the pressure, you feel the issues. But as a company, we've been building at such a disciplined level for so long now with these types of backdrops that we see today. They're really helping our business. It's wind at the back. If you're looking for a place to deploy capital during a time that we're in, during the time that we're in, we're really, we're built for what we're facing today and the myriad of challenges and risks.
Are you based in Denver, Colorado?
Correct.
That's a historically kind of in the center of the West. That's been one of its, I guess, sort of economic niches. And in terms of mining, also, you're also strategically positioned with at least to be able to sort of have you're kind of in the middle of a lot of mining, Nevada, Idaho, Wyoming as well. Has that location been a boon to you at all while working in this industry, and how so?
It certainly has. I mean, when you're in the industry, whatever industry that may be, you want to be at the epicenter of it. That gives you a multitude of advantages: networking, exposure, access to different people and different opportunities that you wouldn't otherwise. So Denver is certainly, in my opinion, I think it's pretty objective at this stage. Denver is really the mining capital. From Newmont's based here, largest gold miner on the planet, and a host of others, very significant mining companies are based in Denver, where from a US perspective, the US has really forgotten about mining over certainly the last 50 years. So Denver is kind of the hub for the US. Certainly Vancouver and Toronto are pretty material hubs for mining. I'll tell you, everything pales in comparison to Perth, Australia, though, where mining is such a focal point, that along with oil and gas, and it's such a significant part of those economies, that if you're ever kind of looking for, well, where is mining still very, very relevant to pretty much everybody that's in a major city, it's Perth. But yeah, Denver has served me and the business very, very well. It gives us certainly kind of front row access to a lot that's happening within the mining industry.
How has Denver changed over the last 2 years, in your opinion?
I think it's changed along with the whole world. It really has. You've seen certainly a lot of movement out to the suburbs, so less people living in the cities, certainly more work remote. You've seen, so we're right next to all the ski hills, obviously, a lot of the big name ski hills. And you've seen what last year was very empty slopes to very busy now. And again, I think that feeds into what's happening with inflation, is you had a lot of pent up supply. And then with the supply chains broken and all the issues that we see, you had pent up demand that's now being exercised, and there's not supply there to meet it. So, in terms of the little Denver microcosm of inflation, you're seeing the effects of kind of all these challenges unfold up in the mountains where people are looking to get back on the slopes. So Denver is probably pretty typical in a lot of ways to your average big city in the US.
So we look at the gold headlines, and one that jumps out is that AMC recently bought $28 million stake in a gold mining company. Can you speak to that news?
I saw that as well, and I had to reread the headline a few times to make sure I wasn't seeing things. So I can't tell you exactly what to make of it. I'm sure there's been some message board chatter on the subject matter that maybe has in some ways better insight than I do. I think what it does speak to is that generally the investors that are watching the current climate that we're in from an investment perspective are understanding that the metals are really, really well positioned. If you think about the asset classes that have increased really by double-digit rates of return for the last 5 years consistently, you look at anything from the NASDAQ, tech, real estate, used car prices, you name it. The performance of almost every asset class has been exceptional, where the metals has been somewhat lackluster in a lot of respects. And I think people are realizing that this is potentially that. I don't think it's contrarian anymore. This is the place that you want to be. AMC maybe no different in saying everything else, all the other valuations have gone crazy, yet for a lot of metals, they haven't, unless you're talking about nickel, of course, and maybe uranium and a few others that, where you've had nickel literally stop trading on the LME. But the reality is metals overall, I don't think have kept up with some of the other asset classes in terms of price performance.
If we dig in a little bit more to this AMC story, we can see that as Full.com reported, they made headlines on March 15th when they bought a 22% stake in the gold mine company Hycroft Mining. And when I look at this, it harkens back to the Tesla statement at the time when they purchased Bitcoin. Obviously, Bitcoin made the headlines, and that is, in fact, what they actually ended up purchasing. However, in their SEC filing, they also mentioned gold by name, I believe, and other commodities and assets. So this seems like a clear acknowledgement by listed companies that inflation could eat into their bottom line and that they need to hedge, and that perhaps AMC's board is more conservative than Tesla, which makes sense. And this is the direction they went. Perhaps they're looking for more quick gains than had they purchased physical gold. Do you kind of agree with that take?
I guess my philosophy is be an expert in whatever you're doing. Be an expert. Do I see AMC as an expert in the mining investment sector? I really don't. It's hard to argue that. So I think investors, and this goes back to the core philosophy that I have and we have as a management team and as a board, is we serve our investors. We serve a specific function for our investors. And if investors wanted to invest in movie theaters, they can go do that, but they don't buy Vox for us to invest in a movie theater. I don't personally think that they should be buying a movie theater chain to go invest in the mining sector. I would buy Vox to execute that exposure that I'm looking for. I wouldn't go say, hey, AMC, take your capital, spend it. That's a personal opinion. That's not even a Vox headline. That's just me speaking as an investor. I would be upset if the board of a company that I had invested in said, yes, go do something so off the rails from what you normally do. But your point is correct. I think the reality is they're seeing inflation firsthand in all of their costs. They're saying this is going to manifest in a way that eats into our margins. What can we do to combat that? Other than raising prices, that's really the only thing AMC can do, and there's a lid on that. So they had cash, they had the ability to make an investment that they thought was hedged. I would just argue, was that the best hedge? Was that the best mining investment that can be made? And could individual investors be making that decision better? I would say probably.
What if they had, and let's say you held AMC stock and they had said, we just purchased gold?
Look, I would sell. It's not that buying gold is a bad investment. I obviously am somewhat biased in terms of our position in the industry. The biggest problem I would have with that is that you're not experts in buying gold. You're not experts in buying a silver or gold mine. And you don't know what you're getting yourself into. So there's rumors for other reasons they did that. I'm not going to traffic in the rumor mill. But the reality is, I think businesses serve their shareholders. I personally don't think that's serving your shareholders. I think physicals and metals are a good place to be right now. But if you're looking for leverage exposure, that's not offering you that in a lot of respects. The mining companies have the risks that they had and the issues that they've had for 20 plus years of underperformance. They've underperformed generally when gold and silver ripped back in 2008 to 2011. And they have those challenges. So again, AMC is interesting because I think it's capturing a mindset that investors are coming to, which is, I've never held commodities, or the commodity percentage of my portfolio. I think if you go back to basic portfolio theory, it says about 5% should be in commodities, metals. And I think everyone's portfolio for the most part is underweighted in that respect. So I think it's this realization that most investors are underexposed. And now it's this rush to get in. But that to me is not the right way to play it.
What's a common misconception investors have about the mining industry?
Common misconception regarding the mining industry. I think the big misconception, and I don't want to sound like a broken record, the big misconception is that if metal prices do well, the underlying mining companies are going to do well. Sometimes they do, a lot of times they don't. And it comes down to the individual companies and then your individual stock selection of those businesses. And that's very difficult for a generalist investor. So I think the misconception is, well, if silver is going to go to $50 an ounce, I should be owning a silver mining company. Yes, in some respects, but if they're never able to pull silver out of the ground, that sugar high that they get from higher silver prices will be very short-lived. And you ultimately as an investor will be in harm's way. So I think that's a misconception. And that's one of the things that we were trying to solve for is if you want that exposure to actually get that quality exposure.
Tell us a little bit more about Vox Royalty. And I guess, for instance, its royalties and streams.
So we have a total of 55 royalties and streams, and it's kind of an ever increasing number with our activity in terms of deal acquisitions. Most of that is, most of that is precious metals. So about 70% of our portfolio by weighting is precious metals. And most of that is in Australia. We have 5 producing assets. We've made a real focus on being in the right jurisdictions. So the other thing that I think we're going to start seeing with inflation, and we didn't talk about this earlier on the segment, so a little bit of a bird walk here. The inflation that we're seeing in the US right now, if you took the way they calculated inflation going back to like the 80s, our inflation would be probably a multiple of what it is right now. That's probably the real inflation. I think we all see that and know that as consumers. So we're looking at unbelievably high inflation. Almost Argentina on their average day, but that's a very bad day when it comes to inflation. But you look at what's happening globally with inflation from Turkey to Argentina to others, it is runaway inflation. It is verging on hyperinflation in a lot of places. The challenge that is going to start presenting for investors, and I've seen different commentary on this, but it's pretty clear to see if you're just, again, looking at the data, I think where your mining assets are is going to be more critical than maybe it's ever been. You take the Russia-Ukraine conflict, that adds to geopolitical uncertainty, but then you overlay what's happening with inflation. A lot of these countries, I think, are going to be forced, they might not necessarily expropriate an asset, but they might come to you and they might say, look, taxes are going up by some astronomical percentage, or you're forced to give us an ownership position in it, all of which is going to increase the costs on miners by a tremendous amount for those companies operating in those jurisdictions. It's going to make owning royalties, if you own royalties in those jurisdictions, more difficult. And it's going to fundamentally change what the investable jurisdictions are. We're ahead of that. We're saying no to a lot of jurisdictions that most companies aren't right now. So we are positioning ourselves for what we think will be a very, very tricky geopolitical climate to be investing in. And these regimes, I'm going to call it expropriation, whether it's the entire mining operation or a piece of it, or expropriation by unbelievable increase in taxes. These regimes, these governmental regimes, are going to have almost no choice to do it, because what industries do they have to support what they need to pay for as a government when mining is going to be the only thing that's really going to be able to support them? So they're going to be left with no choice, which is to take more. And that's always it's always the wrong play, but they're going to be left in a position where they're taking more of these assets. And that's going to have very deleterious effects over the long term. But as a mining investor, where you're owning mining assets, I think is going to matter more than it ever has over the next, call it 5 to 10 years.
You look at Shadow Stats' alternate CPI, and while the official is right around 8%, as we mentioned, Shadow Stats has inflation at what looks to be more like 15%. I don't have the subscription, so I kind of have a static image here. So that's almost double the official inflation rate.
And that is what we're feeling as consumers. That is what the anecdotal evidence has said. And again, I think if you took that 1980s measurement, they've always been manipulating inflation, at least for my experience. And yeah, 15% feels more like the number. I would tell you, I think it's probably closer to a higher number than it is a lower number from 15. So, that's what it is. But if that's in the US, imagine what that's doing in some of these developing countries from that standpoint. And unfortunately, mining assets are going to be some of the more stable assets. And, they view it, right or wrong, they view it as their natural resource, right? And they need to get the benefits from that. And in a climate where rampant inflation is really hurting the governments, it's hurting the people, I think they're going to feel like they're left with no choice but to start expropriating and really taking control of these operations, whether that's, again, from the myriad of different ways to execute that, taxes, equity ownership, or just flat out taking the asset, which has happened many, many times over the past decade. So it's really important, I think, for investors to say, well, where are your assets? Where are your main assets? Because if you're not in a good jurisdiction, I'm not saying that can't ever happen in Australia or the US or Canada. It's just a lot less likely. So I think that's where you want to own your assets. And that's where 80% of our assets are.
I'm looking, I just went to the store last night and bought some steak, and it was 25% more expensive than a week to 2 weeks prior. Just as an anecdote.
Again, I think we could go on story after story after story. And it's frustrating because I think a lot of people are so negatively affected by this. We're all negatively affected by it. But from an investment perspective, there are some options. And I think Vox is a good one.
I think what some people fail to understand is that those who are hurt most by this are the poorest, and whether they're getting benefits, if they're on benefits, actually they're hurt the most because they've got a static income, and it's not increasing quick enough to keep pace. And then also we see that wages are increasing. So in some cases, those maybe are making up some headway, but if you're on benefits or welfare, then you're not getting those increases. Now, go ahead.
Yeah. And what a lot of people don't understand about inflation is how much it hurts the poor and the middle class, because most of our country lives in a situation that's paycheck to paycheck. Well, what does that mean? That means that your expenses are matching your income. So if your expenses that match your income are going up by 20% and your income is only going up by 5%, that is a huge imbalance that you're solving for, a huge imbalance. For the people that are making, the politicians that have turned a blind eye to inflation for the last 2 years and really ignored the telltale signs that we were facing, if they're making, I'm not going to quote politicians by name, but they have $100 million. Look, their costs can go up. Their expenses might be $5 million a year. They make $20 million a year, $10 million on their investments. That isn't going to impact them that much. It's just not. Their costs are an absolute fraction of their income and of their wealth. Whereas when you're paycheck to paycheck and your costs are matching, well, 20% higher costs and 5% or 2% higher income, that throws everything out of balance for you. It makes life very, very difficult.
Calls to mind the comments by Colbert, which I think illustrates this point where he said, he'll pay whatever for gas. Doesn't matter. He drives a Tesla anyway. And I think that really underscores the point about who inflation is hurting. Now, I want to keep speaking about Vox Royalty. Now, you mentioned rather also kind of jurisdictions. Now, you mentioned Australia, Canada, and the US as sort of the safest jurisdictions in your view. And please correct me if I'm kind of skewing what you're saying. Now, of those three, where do you think shows the most promise in terms of security?
I mean, Canada and Australia have instituted some pretty draconian measures during COVID. Not that the US has been completely immune from that as well. So putting those to the side, you have very, very consistent rule of law around mining assets that has played out for decades and decades and decades relatively consistently. And so from a royalty perspective, the rule of law and ownership of royalties and the rights to be paid your royalties have been, really well precedented in both those three markets. And when you look at Australia, which is where we have the largest holding of royalties, second only to Franco-Nevada from a publicly listed company standpoint, Australia, from a economy and the importance of mining is such a huge part of their GDP. And Western Australia, which is, every year this entity called the Fraser Institute comes out and ranks mining, different mining jurisdictions. Western Australia has consistently been at the top of those rankings, or very near the top. But from, I think, a complete perspective, it's the best. And they respect what mining is for the economy still. If you look at what, you and I are both Americans, if you look at what's happened in the US, we need metals for this big transition from hydrocarbons into the metals. We need metals to make that happen. Yet we don't want metals, this is not me speaking, but this is the general opinion, you don't want the mining to happen on your land. Well, then where does it happen? And why is it, if we're looking at the world, again, this is personal opinion, if we're looking at the world and we want to eliminate carbon emissions as much as we possibly can, the carbon footprint of every country is being weighed, well, then why is it okay to say that, well, they can mine for copper in Chile and Peru, but we can't do that in the US? If that carbon footprint is actually probably in a lot of ways, with the permitting and the strictness of permitting in the US, the carbon footprint would probably be less in the US than it would be in some of the developing countries. So I look at it and believe it's just a hugely hypocritical stance that a lot of the US and a lot of the environmentalists take right now, which is you want less carbon emissions. Mining is your way to make that happen, yet you're not helping mining companies get permitted and into production in the US. And the mining companies want to be proactive. ESG is becoming, and has been, frankly, for a while, a focal point of mining companies. And the permitting and the care of the environment, what may have been 50 to 100 years ago, which wasn't there, is now very much there. And so if you are a globalist from that perspective, and you want to eliminate carbon emissions or reduce carbon emissions globally as much as you can, the US needs to lead in all capacities on that. And we're ignoring that mining has to happen. There is some recycling capacity, but generally mining is going to have to increase of those metals to get away from hydrocarbons. And it's trillions of dollars worth of infrastructure and metals that's needed to make that happen. And we continue as a country to not focus on mining. That being said, Western Australia really does. And so you have the quality of people, you have the quality of regime, you can get a mine into production probably as fast as anywhere on the planet, doing it the right way. So we really put a lot of importance on creating and continuing to build a portfolio of Western Australia royalties.
Canada, US, and Australia all have 2050 net carbon goals, if not laws, in place. I think the Paris Climate too also holds them to that. Now, this is not to say that it's unclear exactly how this will play out, because there obviously are there's a kind of carbon credit, which could offset, which means that we're not producing zero carbon, we're just offsetting it in some way. Of course, we saw the Trillion Trees Initiative, which was, I believe, pursued by the World Economic Forum, but was actually something that Trump also had committed to or pledged to or given lip service to, maybe is a better way of putting it. Now, when we go to Mexico, however, and I believe you have some royalties coming out of Mexico, there is no net zero target, although a solid regulatory framework for greenhouse gases. Can you maybe speak to which countries south of the border you might think are more secure than others, and is Mexico among them?
South Mexico's continue to be a more and more challenging place to operate. The cartels are part of that issue. I think the new regime that they have has certainly made it more challenging to be a mining company. So I think they continue to talk about increasing the tax rate significantly on mining companies. So Mexico's difficult. A lot of South America is very difficult, frankly. It's not necessarily, and that's a broad brushstroke. So there are differences between each country and their individual regulations and receptivity to mining. Brazil is one that we found to be a little bit more favorable for a host of different reasons, but it is challenging. And you're talking about, let's go to Peru, which had a decade ago been a decent mining jurisdiction. We have some royalties there. They're relatively early stage and not a hugely significant part of our portfolio, but the communities continue to be incentivized by different groups to create challenges for mining companies that are operating there. And it's never just a one-way street. Mining companies have to continue to invest in these communities and build those relationships up. But they've basically been allowed to shut mining companies down by, without following rule of law. You've seen the taxes and the proposed taxes create just a tremendous amount of uncertainty when there's not consistency from the political regimes about the importance of mining. You really see this deterioration in the confidence of mining companies investing in these jurisdictions. And even as a royalty company, we have our confidence is shaken, and we've taken a forward perspective on what we believe is going to play out geopolitically, and we're avoiding a lot of these jurisdictions and have been for quite some time. But it's really a challenge because there's a lot of metals needed, trillions of dollars in metals and infrastructure that's needed to make this transition from hydrocarbons to metals and all the renewable sources for that matter. But if you don't have mining, you can't make that happen. So I think the hypocrisy of that is going to become apparent. It's interesting how gas prices running up. It's clear that transition isn't going to happen overnight, but if you want it to happen, you better start investing in the different components of this supply chain and of this transition, mining being, if not the key, one of the key inputs to a lesser carbon economy.
You say the hypocrisy of that's going to become apparent. We see essentially, I guess, governments putting goals essentially on the private sector. And the question is, can the private sector deliver on the materials that we need in order to, I guess, kind of remake the infrastructure of civilization, really? And I'm surprised and what we'll see, how will it become apparent? I think it's going to become apparent through price rises. We're going to have a shortage of essentially all of these metals we need, and the prices are going to skyrocket. We're going to see inflation in these commodities, in part due to perhaps, I guess, economic warfare, but also due to just simply not investing or hamstringing the efforts to bring these metals to the market towards the ESG goals. I'm surprised to see or to hear that Mexico has become so difficult. I know that Crescat Capital is also kind of de-risking for Mexico, and perhaps already has, because AMLO, the president there, he makes interesting comments. Just today, he has a train. He's building the Maya train, which is a 950-mile rail line, which will run a rough loop around the Yucatan Peninsula, connecting Caribbean coast resorts with archaeological sites further inland. And he angrily rejects environmentalists who are trying to stop this project. He calls them fake environmentalists. He says, quote, they convince or they hire performers, fake environmentalists, who supposedly are defending the environment, and they start a campaign against the train. A group of Mexican singers, actors, and environmentalists have issued a public protest against plans to cut down a swath of low jungle between Cancun and Tulum to build a tourist train line. So it's really interesting. Furthermore, AMLO, he dismantled in December a climate change agency, calling it a legacy of neoliberalism. And he, at that time, also criticized fraud environmentalists who he says didn't speak out in past administrations. I'm not sure how much that is true. However, I find it contradictory that it's becoming harder to mine in Mexico while we're getting these statements from the regime there.
Yeah, I mean, those are positive statements. There's no doubt about it. But the reality in what we've seen over the years, and this is not just a 6-month phenomena, but it's certainly been over, say, the last half decade, is Mexico continues to have a meaningful amount of challenges, not just from one direction, but from many directions. The mining tax, and I don't have his recent statements on that, but I believe the past statements on a mining tax were certainly not going to work in the favor of the mining companies. You've had the cartels continue to have very meaningful influences in a lot of the places that a lot of the mining's happening. So it's that is always a problem. And then you do have these environmentalists, whether they're fraud environmentalists or real environmentalists. They certainly have had an influence with the local governments, and that's continued to make it more difficult. That being said, would I put Mexico in the terrible mining jurisdiction category? No, not at present. You can still operate there in many cases successfully, and there are a lot of precedents and a lot of operations ongoing right now that are doing quite well in Mexico. So again, as you start looking forward, maybe Mexico is one of those countries that really makes a turn and starts to institute positive policy and pushes back on some of what I guess they're calling is fraud environmentalism, and starts to connect the dots and say, well, if you want a decarbonized economy and a decarbonized world, then you need to get on board with the mining companies that want to do it the right way and are committing to do so.
There's a long history here with AMLO's comments. As you mentioned, they kind of go back to him essentially saying that, or rather he won't be at least increasing the mining tax. So that was in 2021, that he would not be increasing the mining tax. However, he did in October nationalize Mexico's lithium supply. And it was about a year ago when he declined to raise the mining tax. He's also made statements that are conciliatory towards the mining industry, but I have a feeling perhaps some private lithium miners might disagree. He says, quote, "We always intervene to ensure that there are no injustices and agreements have been reached. There are very few conflicts that we have currently with mining companies. What we are proposing is that they pay taxes, just as they pay taxes in Canada, that they care for the environment, just as they do in Canada, and that they pay workers the same as they pay mining workers in Canada under the same conditions. The truth is we have advanced in conciliation and dialogue." So I think generally it's probably more uncertainty out of Mexico, which is unfortunate. I think that there were a lot of reasonable policies embarked upon by AMLO's regime, but ultimately, I guess the mining industry has not been a beneficiary thereof.
Yeah, I mean, it's challenging when you're expropriating any form of asset for any reason. It's a very difficult environment to live in. You know, this is lithium in this case. Is it going to be copper next? Could it be silver for its uses in clean technology or renewables? So it's very, very difficult to say, hey, expropriation in any capacity is making it helpful for mining companies. I believe it must have been campaign statements. Again, I haven't been following his recent statements as closely, maybe as someone like yourself has. It's good to see that there is some acknowledgement, though, that mining is needed, and that there are certain cases where mining companies are really doing right by their communities. They're doing right by their employees, and they're doing right by the environment generally. So it's good to see that. I would call that progress, even if there's been some setbacks. I would call that tremendous progress. That maybe that hypocrisy is starting to change a little bit.
Take it for what it's worth, kind of just like, imagine we're sitting at a bar having a beer. And I will say, I like AMLO. I liked him dating back to when he became president, because he was posting Facebook videos of him playing baseball at like 75 years old, like taking batting practice. And at first I was like, this guy's goofy. And then I ultimately started thinking that his promotion of baseball might also kind of come with the promotion of sort of American values. And I thought that became increasingly clear because he was so ridiculous about it. And then when 2020 came around, he seems to have implemented, he didn't lock down the country. Of course, masks and testing were implemented in Mexico, but compared to, I guess, like Australia and Canada, for instance, it was very, I think, lax in Mexico. And then, moving forward, he's also made the statements about kind of neoliberal pseudoscience. We saw it in the context of climate change just a little bit ago, and he's made other comments like that. So those are the reasons why I've kind of kept a close eye on that presidency. Of course, it's tough from the outside looking in to know what's going on. It's tough to know if these statements are sincere or if they are campaign slogans. It has been at least something that I felt interesting to watch the presidency of AMLO. And this also, I mean, I think dates back to his kind of relationship with Trump is another interesting angle there. Trump, he's criticized, and rightfully so, for many reasons, but he had very good relationships with AMLO. AMLO made that clear. You can discount that as him just trying to cozy up to Trump, but it was during an election campaign. And also there's some risks to cozying up to one candidate as opposed to the other. In that case, it was Joe Biden. So it's been interesting to watch his presidency. Now, in the US, Kyle, I'm curious now, where do you think are some of the most promising jurisdictions in the US? If I had to guess, I would say, well, Nevada seems business friendly at least, and then perhaps a state like Idaho as well. What are your thoughts?
Those have been the exact two that I would have named, is Nevada and Idaho. Nevada has been very consistent. I know that permitting has slowed down, and that from what I hear is a direct result of the current presidency and the current regime. So permitting has slowed down in Nevada. That being said, certainly it continues to be probably the best mining jurisdiction that we have in the States. Idaho has made a lot of strides, and while it doesn't necessarily have some of the endowment from a geological standpoint that Nevada does, it certainly has a reputation for being a good jurisdiction where you can get the things done that you need to get done. So yeah, those are two jurisdictions to keep watching, and they continue to be productive even in the current climate.
How about Montana, for instance?
Montana's tough. Really depends where you are. It depends what the activists feel like on any given day, which is usually consistently against mining. So Montana has some spectacular geology. And, I think some mining companies there, like Hecla, that really are willing to do the right thing by the environment and jump through all the hoops and go over all the hurdles to make sure that a mining operation is doing it as environmentally responsibly and safe as it possibly can be. But you have, a lot of, let's call it, people from outside of Montana influencing what happens in Montana, and pour, call it limitless resources into fighting mining companies getting permitted there. And again, that's frustrating because they have some great copper, silver endowments from a geological perspective that would really help advance the world and advance the US in the decarbonization efforts that needs to happen. And they're really preventing that from happening. So that hypocritical stance, I think, it can be very well seen in some of the case studies out of Montana. So, it's tough. It's tough. And these mining companies, I think, are willing to do what it would take to be responsible stewards of the environment and willing to invest in that. But it's been a blanket just no on mining. And I think that needs to evolve. And I think the environmentalists and some of the groups that support this just no to mining stance, the sooner that they come around to mining is actually helping them solve their end goals, the better it will be for both the economy and them and the initiatives that they really care deeply about. So I'm hopeful that we'll start to see some breakthroughs in that, and that instead of just opposing mining, that they would actually work with the mining companies and collaborate closely in terms of how to really produce a mining operation that is environmentally sensitive as possible. And I think that would help everybody.
Montana is an interesting case study because it has these cities that are very progressive. And then around them, I think what more so than a lot of other states, it's like deeply conservative, very, very conservative. And there's always this tension in Montana. I'm curious, could you speak to Wyoming at all?
A little bit. I don't know Wyoming very well. Clearly, it has some coal production. I looked at it a long time ago from a uranium perspective and some ISR Institute recovery methods that were being planned for uranium operations in Wyoming. I can't speak to Wyoming at an expert level. So that's one that I'm not as familiar with. Certainly, once I was looking at operations there probably over a decade ago. So a lot's changed, presumably.
Yeah, well, my expertise on Wyoming is that I can tell you there's not a lot there. And if you're going for a drive, you're going to be driving for a while before the next town. But it's beautiful. Now, can you speak more about the news at Vox, what people need to know about Vox Royalty, how they can get involved, and gets exposed to Vox. Now, you've recently on March 10th announced Vox that recorded preliminary 2021 revenue. You announced that revenue, and then also an application for NASDAQ listing and corporate update. So can you just in general kind of give an overview on what's going on at Vox and how people can get some exposure?
It's a very exciting time for our business. Again, a lot of these challenges that we've spoken about, we have done a lot of the hard work for investors with positioning our business to be very successful in today's climate and to be that outlet for capital and investment that's really working hard and should be performing for investors. So we think we're well positioned to continue accomplishing that. From the NASDAQ standpoint, we are really excited about that. That one of the things that's probably kept us a little bit back as a company is we're on the TSXV, the Toronto Venture Exchange, which is a great exchange, but certainly is not to the stature and the liquidity that the NASDAQ generates. So we expect that to happen in the summer. And that should really be a boon to our liquidity, and the precedent certainly saw some share price correlation on that dual listing. So from a Vox perspective, we continue to have what I believe is the biggest funnel of opportunities because of our specific model of buying third-party royalties. That's royalties held by the prospectors and typically the original discoverer of the geological anomaly. And so we're not beholden to mining companies needing capital or the competing forces that want to give mining companies capital. We're kind of outside of that ecosystem. And it's really allowing us, at the end of the day, to find really quality royalties that are going to generate revenue for our investors, growing revenue, and ultimately growing profitability. So we're really excited about where we're positioned. We believe we're a unique breed of royalty company. And in today's climate, I think investors being exposed to these types of opportunities, these types of concepts and businesses is going to be very, very helpful. But in terms of more information, voxroyalty.com. And always, we're pretty active on all the typical social media channels, and ir@voxroyalty.com. I'm usually on there pretty frequently checking the emails.
So when it comes to NASDAQ, it was a dual listing, or what happens to those who are holding on TSX?
So it's a dual listing. So we'll continue to be traded for the foreseeable future on both exchanges.
And kind of speak more about that process and what it means for Vox, and maybe not as an exact timeline, but an approximate timeline.
So we qualify under all the headline necessities that you need to have as a business, share price, those types of things. So we're in good position there. We're simply going through the procedural process really as we speak. So timeline for us is likely June, July, potentially. Could it move faster than that? We would hope, but we'll continue to move through that process. But again, it's opening up a very, very significant audience and pool of investors that find it harder to buy our stock on the TSXV or in the OTCQX, which is not a full exchange listing. So you take a small cap company like Vox and you really enhance the depth of liquidity and the depth of the investor marketplaces that we can bring awareness to Vox within. I think it's going to be a very significant milestone for our business in terms of what it means for liquidity. And we would expect that there's some positive correlation with share price as well.
And that's VOX on TSXV.
And Vox CF is how you can buy it right now on the OTC in the US.
Excellent. Well, we've had the honor and privilege of sitting down today with Kyle Floyd. He's the CEO of Vox Royalty Corp. Thank you so much, Kyle, for joining us today.
My pleasure, Justin. Thanks for having us on, and greatly appreciate the opportunity to sit down on the program.
Pleasure's all mine, and thank you everyone for watching. Have a great day.